You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are watching, listening to the Financial Survival Network. I'm Kerry Lutz. Today is 9/7/21. Hope you all had a great Labor Day weekend. I know I did. I'm still recovering from it. So if I look a little tired around the eyes, there's a reason. But we'd love to hear from you about your Labor Day. Did you do anything totally out of the ordinary, special? Email is kl@kerrylutz.com. Right now, we have Chris Miles with us. Chris, your website, Money Ripples. You call yourself the AntiFinancial Planner. And that's a good thing in this day and age, because with markets trading at or near their all-time highs, at some point that trend is going to reverse. And if you're not out of the way, it'll be like trying to catch a falling knife. Things just don't go up forever. Eventually, what goes up must come down. And oftentimes when it goes up high, it comes down really fast and hard. Well, Chris, appreciate you coming on the show. So how did you become the Anti-Financial Advisor?
Yeah, I started off not going that route. I actually started off being the mainstream financial advisor, the conventional stuff of save everything, spend nothing, live on rice and beans, right? Do it forever, save it forever in mutual funds and whatever I would sell you, which is basically what I call financial Mexican food, because Mexican food has always the same ingredients, no matter what it's called, right? It's got beans, rice, cheese, lettuce, tomatoes, all that kind of stuff. Doesn't matter if it's tostada, quesadilla, tacos, burritos, they're all the same thing, right? Just repackaged in different names. And that's really all financial advising is. I realized after 4 years of being in that industry is I was just selling basically just mutual funds, annuities, and insurance, right? That's really all it comes down to. It's just a different combination of those things. And I started to realize something. It was actually a friend of mine who turned me on to this, right? He kind of said, listen, Chris, and this is the guy actually trained to be a financial advisor, left to go to real estate investing. And he said, Chris, let me ask you a question. How many of your clients are financially free? This is right at the end of 2005. And I was like, well, none. If you mean by not worrying about money, then none of them are, because even the ones that are retired still wonder if they're going to run out of money. Because if you watch CNN, the communist news network, obviously you're going to freak out, right? You're going to be scared of everything. So I said, well, no, I've got clients that even retired, they're not financially free. They're not really, truly mentally free. And he said, all right, well, good job, Chris. How about this? How many of you as financial advisors are financially free, not off the commissions you're earning, but actually doing the investments you've been recommending? And I thought about it. And I said, well, none. I mean, even the guys that have been doing this since the late 70s still have to keep working because they can't retire yet. He said, well, there's your problem. I was like, well, give me the answer. He's like, I won't give you the answer because honestly, you just got to argue with me about why stocks are better. And I said, well, listen, I'm open. Give me something to really grasp onto. And he said, all right, Chris, here's the thing. He's like, if you're serious about this, go get the book, Who Took My Money by Robert Kiyosaki, which is a lesser known Rich Dad, Poor Dad book. To sum it up, it basically means mutual funds suck, right? That's pretty much the message of that book. And then he said, listen to this radio show. It was AM talk radio back then, right? Early 2006. He's like, listen to this radio show that's done by these two guys that are talking all about capitalism and why that's so important with creating wealth and things like that. And they're also real estate investors. And I said, all right, I'll listen to that show. And so I did. And that was from January through March. And then March, I said, I can't do this anymore. I can't keep teaching something I know it doesn't work, because I ran the numbers. I ran the real returns of the stock market, which are not 10 or 12%. Even in the last 30 years to date, right? The stock market's averaged about 8.4%, right? That's the real rate of return. And that's after we've had about nearly 13 years of an uptrend, right? We haven't had a pullback, which has been, I hate to use this word because it drives me nuts, but literally this is the true word, which is unprecedented, right? We haven't seen the market go up so much, so long without a pullback. And I was like, this is ridiculous. 8.4% in a very optimistic time period. That's not quite the same thing. And when you do the numbers, you start to realize, well, between that and between the real rates of inflation, not the ones that the government tells us, right, and everything else, you really have no hope of retiring with your 401ks, even with 100% match. Like you would have to keep working into your 80s and then hope you die soon. That's really what it's come down to. And that's what I'm finding out there today is that even still today, people are coming to me saying, listen, my financial advisor says I'm on track, but based on these numbers, I won't be able to retire for at least another 10 or 20 years. And I'm in my 50s or 60s. So how do I make this work? Right. And that's kind of what I said. I'm done. I'm no longer teaching about this stuff ever again. I became a mortgage broker in 2006, or I continued being a mortgage broker in 2006. And then I taught ballroom dancing because little known fact, I was one of the nation's top amateur ballroom dancers. But I started getting into the real estate game and things like that. And pretty soon by the summer of 2006, I was able to be financially independent myself when I was 28 years old. And that was just kind of a huge thing to rock my world because I basically did the opposite of what financial advisors taught to be able to become financially independent. And that's kind of been my message ever since. 2007 came out of retirement, started teaching people how to do that, went through the ups and downs and lefts and rights, the good and the bad and the ugly. But even now I'm actually financially independent today.
Excellent. Well, that's good to hear. So, hey, ballroom dancing. I'm a big proponent of it myself. I found had a number of benefits, not just the things you would expect, like more graceful physical presence, but mental acuity, it really helps. What's the analogy between ballroom dancing and investing?
I would say this: it's not about working harder, and it's not even about working smarter. It's about working right. Because I remember ballroom dancing. When I first started, I was working hard at it. Eventually, when I started to realize I could get good at it, and I was even knowing all the steps. I'd studied the steps. I was very meticulous that way, and make sure, especially Latin dancing, that was my favorite. But I remember there was a teacher. She just said, "Hey, I was even dancing on the world championship team too that went to Blackpool a couple years." And the teacher said, "Chris, you're good, but you're not great. Like there's just one little thing you're not doing to win competitions." Right. And I thought okay, maybe it's something to do with the steps or something else. Or she's like, "Nope, it has nothing to do with that at all. It really comes down to your core, your center. It's like how you're able to isolate your muscles and things like that. It's like, if you get this nailed down, you'll start winning." And so I really started focusing on the core, right? Just that center, those real key core things. No pun intended. And as a result, what ended up happening is I started winning competitions, and my dancing went from really good to doing well in competitions to all of a sudden winning them. And that was really it. It's not about working harder or smarter. It's not about how much you study. It's about doing it the right way. And then when you work hard and smart there, everything accelerates.
So true. So true. I've experienced it myself. I've witnessed it. Just watching people's golf swings. You could hack, you can swing really hard and miss. You could swing really light and just give it a little tap. But when your swing is right, everything else falls into place. And I think investing is the same way.
Absolutely.
In many respects.
It sure is. No, it's definitely the same way. I see so many people that are quote unquote smart, right? Like they study things or watching YouTube videos like crazy or podcasts and listen to everything, but they haven't figured how to make it all work together to generate real results, right? To really, and it's not like somebody's like, hey, I bought 5 properties. I'm making, maybe $1,000 or $2,000 a month of passive income net. I'm like, yeah, but that kind of sucks. Like we should be higher than that, right? You can do better. And that's where it's about creating efficiency, like doing it the right way to be able to hit those numbers and be able to create freedom faster.
All right. Well, I like the concept. So tell us what areas you're investing in now and what you're telling your tribe to invest in.
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to reestablishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, primarily I'm telling people to buy real assets, right? First and foremost, if you're trying to create passive income, we want to have things that actually do that. They're real assets, and real estate's really that general area, which is a big area, right? You can invest in so many different aspects of real estate investing that are, have different market swings and things like that. But for me, I learned this even from the last recession. The big mistake that myself and a lot of people made is you start gambling on appreciation, right? Don't invest for appreciation, invest for cash flow. So to me, when someone says, hey, I did a flip on a property and made $50,000, I'm like, well, that's great. But the thing that's sexier to me is when someone says, hey, I got a property, I'm making like $400 per door. To me, boring is sexy, right? Like the thing that's the steady, tried and true, predictable results, that's way sexier than just trying to hit a home run. And yeah, you'll get those, but that's not the purpose. And so I get people focus more on rental real estate, but most of my people, my tribe, are very passive. They're busy doing their jobs or their businesses. They don't want to be babysitting stuff, right? So we look more like at turnkey real estate investing, where someone else manages the property for you. And most time you're investing out of state. I get people on the West Coast are like, yeah, I got a property here in California. I'm like, sell it. You don't even know the numbers, Chris. I don't have to. I already know. Give me the numbers. Okay, confirmed it. Sell it, because the properties, Washington, Oregon, California, a lot of the Western United States aren't producing the cash flow they could if you're out east more. And so we look more out that direction. We do things with syndications, where you might pull your money together and buy into an apartment building or into self-storage. You might go into something with, like assisted living, which took a big hit in 2020. Now it's trying to recover a little bit, right? I mean, there's so many different places you go. Land, you can do land purchasing, or even have someone else be able to do land purchasing for you. And you can start creating a lot of money there and easily make double-digit plus returns, like 10% plus is easily, and that's the big difference, is that in the financial advising world, what really rocked my world a bit was I remember where I would tell people, okay, there used to be that whole 4% rule that some people still talk about. I know the whole FIRE movement talks about the 4% rule, which is such an old, out of date rule, right? Because living on 4%, what it was is that if you had $1 million saved up in your mutual funds, your IRAs or 401ks, you could live on 4% or $40,000 a year. But the truth is, even 15 plus years ago, we were debating that whether that was really too much, too aggressive, because rates were coming down and people were living longer. Yeah. And so we're saying more like 2 or 3% would be a safer number to make sure you don't run out of money. So think about this. Even if you had $1 million saved up, you're living on 3%, even on the high end there, that's $30,000 a year. You're now below the poverty line. Congratulations, you're a broke millionaire. Where the opposite's true, where, if we're doing things that are more cash flowing, things like with these alternative investments, like in real estate, it could even be oil and things like that too. But, or franchises, you can go outside of the normal, typical financial system and make at least 10% returns. So if you make 10% on $1 million, that's $100,000 a year versus 30. And now if you do it right, you can even keep most of the 100,000 away from taxes. Where most of the time pretty much all the time, if you get any kind of IRAs, 401ks or anything other than a Roth, which you can't put enough in to really make a dent into that tax bucket, but you're paying taxes on that money at $30,000 a year. So you're keeping what, 25,000 if you're lucky. That's just no life to live. That's broke. And so that's the big shift, is that if you have $1 million, 100,000 versus maybe 25,000 after taxes.
Hey, so what about the future of Social Security here? What's going to happen there?
Who knows, right? I mean, the truth is that the politicians know that the baby boomers, of course, have been aging and moving into that category. They're not going to get rid of it. The prediction, of course, even as recently was saying, about 2034, we might get only 70% of our benefits, right? Mm-hmm. They're all saying, hey, that's a myth. We'll never fully run out of retirement money. My opinion is, especially now I'm 44, is I'm not banking on it, right? I believe that the founding fathers, one of the big, huge principles they taught was personal responsibility, right? Personal responsibility creates freedom, creates true prosperity in a country. You can't do that just hoping and praying that Social Security will work, which is what the typical person is doing right now. Baby boomer who knows that the retirement, they can't live off enough. They need Social Security to live. And I don't think that's the way to live. I think the Social Security should be a bonus for you. Like, yeah, you paid into it, you get some back, great. But don't rely on it. Don't rely on the government, because whenever you start relying on someone else to that extent for your own livelihood, for your own what you would think is freedom, really you don't have freedom. You've exchanged it for security, and maximum security is a prison, right? I mean, you don't want that.
Well, what did Janis Joplin say? Freedom's just another word for nothing left to lose, right? So, okay, so we like cash flow. I got that. And that's understandable because in the end, capital gains can be really difficult to achieve.
Yep.
It requires proper timing, proper selection, and some luck as well. The proper timing. But with cash flow, so top 3 cash flowing investments that you and your members are investing in now.
Yeah, currently, one is, I mentioned Turnkey Properties, right? I mean, that even though the inventory is less than it used to be to find good properties that pay you at least 10, 12% cash on cash returns, that's been one of them. I mentioned syndications. I've definitely seen some really good ones, especially in the space of certain apartment complexes, especially with affordable housing, even with self-storage. There's been some really good things there that I've seen. I mean, one of my contacts, he actually sent out a deal that says, hey, here's one that will pay you 10% per year minimum, but the expected return's another 60% on top of that in 4 years. So basically 100% return in 4 years, right?
Oh,
it's awesome.
That's approaching Bernie Madoff territory there. How are you doing this? Come on, I'm a total skeptic when it comes to those kind of returns, because that sounds like they're going to be selling it or refining it or something.
Yeah, exactly.
I'm not sure how they can do this.
That's how most of them do it. You know, most of them aren't just trying to hold on to this thing forever. They're just trying to do it as a value add, right? Where it's an underperforming asset. Somebody else owned it. They're not doing well with it. So they can raise rents, they can raise the numbers and the profits right from day one. And then of course, when you raise up the profits in real estate, especially with that kind of real estate, commercial real estate, you also increase the value of it. Where it's different than with a home. You buy a home, even if the rent's higher, it doesn't really raise the value of the property, the appraisal amount, right? It's not based off profits. It's just based on market comparisons. And so there's a difference there. And, you know, I would agree with you. Like there are some Bernie Madoff stuff out there, but I usually see that when I see people in the options game, right? When someone says, hey, this guy, he's got this options fund, he's paying 6% a month or 10% a month. I'm like, I can guarantee you, I taught people how to trade stocks and options. I knew the best stock and options traders out there. And I'm telling you, you're not going to make that kind of return, you know, and every time that was a scam. But 25% a year, I mean, as an average is not too hard to do if you have the right deal. Now that's not a common deal, just so you know, like most of the time it's usually 17 to 18% average return. That's pretty typical for in a syndication in an apartment complex or something like that over those years with, like you said, the refinance or the sale of the property, right? But, you know, again, it's never guaranteed, but I'll tell you that I much rather bank on that kind of stuff than I would on the stock market where I have zero control, zero effort, you know, and even in my real estate. I mean, my real estate's done like 280% in the last 3 years with the cash on cash returns and all the other returns that I get because I use leverage. I use banks, right? So is it impossible? No. But is that going to be a sustained rate of return all the time? Of course not. You know, I usually only expect a 25, 30, 40% rate of return on my own properties anyways.
All right. Well, you gave us a lot to chew over. I know that you out there are going to want to talk to Chris, connect with him on the web. How do you do that, Chris?
Yeah, 2 ways. You can either go to my website, moneyripples.com, or you can go to my show, my podcast I have, which you can find on iTunes or YouTube, called The Chris Miles Money Show.
Hey, and not to mention your book. How do we get your book there? And tell us about that again. Yeah,
there's a book on there, just an easy, simple read. It's like 30 pages with page breaks. It's called Beyond Rice and Beans, 7 Secrets to Free Up Cash Today, which shows over the several hundred clients that I've coached over the years, or like the top 7 ways they found cash, right? Like how are they able to free up on average $34,000 a year without living on rice and beans, without being cheap, you know, kind of a slap in the face of Dave Ramsey, where, you know, most people are coming from a place of scarcity. This is saying, hey, you can still do wise things. You can still live a life and, you know, essentially have your cake and eat it too.
All right. I like it. I'm going to get the book myself. Appreciate you coming on, Chris. Questions for Chris, send an email to kl@kerrylutz.com. We will get you answers. And while you're at it, go to our site, financialsurvivalnetwork.com, and we will give you a free newsletter subscription. Just sign up now. Chris, been a pleasure. We will talk to you again soon. Thanks so much for stopping by.
Same here, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.